Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Thursday, October 2nd. The euro touched the lowest point seen during the last year, tumbling nearly 12% since the July high. The pair fell below the LFB S1 at 1.3930 after the Frankfurt and London markets opened in anticipation of a more dovish tone from the ECB. That speculation was rewarded when Mr. Trichet said that upside risks to price stability had diminished. In economic news, the euro area PPI showed deflation for the first time in almost 2 years. The release number of negative 0.5% was in line with analyst forecasts. Year-over-year producer inflation in the Eurozone is up 8.5%, with the largest increases in the energy index, which rose 22.5% since last year, and intermediate goods, which gained 6% from 1 year earlier. The euro has found support in the 1.3750 area. The last time the pair saw areas this low was August of 2007. The RSI is showing that the pair is in oversold territory, but will probably not see buying until a solid cross above the 30 line. The pound fell 100 pips, staying on track for a fourth consecutive day of losses. During the early part of the Asian session, the pair tested Wednesday's lows and succeeded in breaking lower during the European session. The pair later stabilized in New York. In economic news, UK house prices have continued to decline for 11 uninterrupted months, reaching 12.4% year-over-year. In September, prices declined by 1.7%, which is more than analysts had predicted. Analysts are believing that the bottom in the housing market has not hit yet, saying the central bank may have to cut rates sooner or later. The Great British Pound is still trading in a steep descending triangle with support at 1.7450. The RSI on this pair has yet to solidly cross below the 30 oversold line. Volume has been increasing this week as the dollar gains strength. The Aussie made a new low for 2008 in overnight trading. The pair moved in a tight range during the Asian session and early European trading hours, but broke lower, falling 60 pips in just a few minutes as the European session progressed. The pair traded generally lower in New York as gold declined. Australia had a trade surplus of $1.36 billion for the month of September. This is sharply higher than analysts' initial expectations of $200 million, and is the largest surplus seen since June of 1997. Exports were up 6%, while imports were down 2% for the month of September. The Aussie has certainly tumbled in the past 7 days, losing over 700 pips. This pair is creating a descending triangle. This chart formation generally breaks to the horizontal line. The RSI is still slightly above the oversold 30 line, but if it crosses below that point, it may drag in enough sell orders to break the support. The CAD moved sideways during the Asian session, unable to break very far away from the opening price. With oil trading under the $100 a barrel benchmark, the dollar looks set to strengthen against its Canadian counterpart, and that is exactly what happened during New York hours. The dollar reached its highest level against the loonie since September 11th as crude futures declined a massive 4.6%. The cup and handle seen on the loonie yesterday certainly got the pop it was looking for today. The pair is still facing more resistance at 1.0815, which has acted as resistance twice in the recent past. The RSI is broken above the 70 oversold line, but this does not necessarily mean that a fall is in order for the pair. The Swissy broke the high of the previous session and the LFB R1 at 1.1316 at the same time, and has gained 60 pips in the overnight. Furthermore, the Swissy has finally managed to close a 90 pip gap dating back to the middle of September. The next resistance area for the Swissy is at the 1.1400 area, the high mark from early September. That price was breached briefly in New York, and traders will be on the alert to see if the pair can sustain that level. Volume has also been increasing exponentially this week as the financial rescue plan appears to be getting passed. The yen declined during the overnight session, moving in tandem with the S&P 500 futures. The pair continues to trade below the 200-day simple moving average to test Wednesday's low. Once in New York, the pair spent the day in decline as stocks took heavy losses. The Japanese monetary base came in with a reading of 0.9% in September. This follows a slight decline in August of 0.2%. Seasonally adjusted, the monetary base soared 15.8% in the year leading up to September. This follows a 5.7% gain in the year to August. The Japanese yen has formed into a descending triangle with support seen in the 103.50 area. The pair has found resistance on the downward sloping trendline 4 times in as many weeks. The RSI is still within a channel, suggesting the pair really has no direction yet. On the upcoming economic calendar, there are 4 top-tier releases scheduled for tomorrow. At 0430, the UK will be releasing their services PMI. At 0830, the US will release the non-farm employment change and the unemployment rate. And at 10 a.m., the US will release their ISM non-manufacturing PMI. In Asian equities, the Nikkei fell 213 points or 1.88% to close at 11,154. The Australian S&P ASX declined 33 points or 0.7% to close at 4761. In European stocks, the German DAX fell 145 points or 2.51% to close at 5660, and the UK FTSE lost 89 points or 1.8% to close at 4870. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 10,482 after losing 348 points or 3.22%. The S&P closed at 1114, down 46 points or 4.03%, while the Nasdaq finished trading at 1976 with a loss of 92 points or 4.48%. Crude oil for October delivery was recently trading down $4.61 or 4.68% to $93.92 per barrel. Gold futures for December delivery were trading down $43 or 4.92% at $837 an ounce. In Treasuries, the yield on the 10-year note fell 7.3 basis points to 3.742%, while the 2-year note's yield lost 14 basis points to 1.819%. Overall, economic news from the U.S. continued to show the economy is moving closer to a recession. Factory orders declined 4% in August. This is the most in nearly 2 years. In the week ending September 27th, initial claims for new unemployment benefits was 497,000. An increase of 1,000 from the previous week's revised figure of 496,000. This is the highest in 7 years. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.